Hey guys, how's it going? This is Gershon from Technical Option Traders Inc. Hope you guys are having a wonderful day. Just before we begin, I please humbly ask you guys to subscribe and like the videos that I produce, just to help me, beat the YouTube algorithm. I'd greatly appreciate that. And if you guys like my work, please subscribe to the channel and leave some comments below, after the videos are done. So just to see here what's been going on. So the number one thing we want to focus on, price is below the 50 and the 200 day on the S&P 500 for a continuous amount of time. Okay, I've been mentioning this level to you guys over and over again, that the price will continue to stay in this level until the FMOC meeting. So when I say this level or this zone, it's what I meant between 450 and about 410. Okay, so continuous downward pressure in the markets over the last few days here. So whenever a move gets one way, always wait for the next level to form, which was forming right about here. So it's a support level. So this could have consolidated and pushed us higher. Unfortunately, the downtrend or the sellers here are aggressively in control, and they do not want us to get any higher here, and they keep pushing the market lower and lower. Now this could be geopolitical tensions that we're seeing that are not being de-escalated. It could be due to inflation and cost of consumer goods. The U.S. spending report came out, like the personal income report versus the household spending. So that wasn't really that greatest. So that's a lot of factors, or economic factors and geopolitical tensions that are going on, are very negative. So it makes sense for the S&P 500 to be stuck in a range, not really make directional plays. Last couple of days we had earnings. Apple reported, and as well as Amazon. Apple did not give forward guidance, so that makes sense of why the S&P once again is falling. Okay, Amazon had the slowest growth as well. So once again, negative news for for the two top weighted stocks in the S&P 500. Okay, and then we had Microsoft, Facebook. All of their earnings were okay, but they weren't the greatest to push the market to new highs. So right now the market is testing this level right now, and we want to see if it gets below 415. 418 was my level, and now my target is about 410, and to see if we can get over there to the 410. If the 410 breaks, that's an aggressive play to the downside for me, to about 395, and that's something I'm going to keep my eye on. Overall, S&P 500 today, very, very bearish. The whole market today is very bearish. We'll go over to the sectors in a later segment of the video. Looking at the triple Qs, tech has been destroyed. This is like a head and shoulder pattern. It's retesting the support level. It's bounced from here multiple times, but the fact is that we're retesting it again in such a short time is worrisome to me. And we see the test of 306 and about 297 on the way for tech in the short future. Okay, so it could be next week when we have Fed announcing interest rate hikes, especially if they do more than usual, if more than expected. If we have an interest rate relief, or the Fed is more dovish, then we're gonna have a small rally. So I'm not gonna be bullish on this, but a small rally could be in the picture for the market, depending on the Fed's tone and how they're dealing with inflation. But with rising geopolitical risks, I don't see that happening just yet. Okay, that's something to keep in mind of. But if we look at the hourly time frame on the triple Qs, we got a bear flag. We're holding this level right here between 316. But if we do lose this level and we lose 310, we're going to break down really, really fast to the downside to about 300 very quickly on the triple Qs. Dow Jones overall consolidating, not really looking good here. So Dow, we want to see Dow Jones break below this trend line and then break below 328. We can test the 322s. If 322s go, we're going to go all the way down to about 306. All right, keep that in mind right now. I don't see any news or any reason why we should be bullish on this market or buy the dip here. This is a long-term consolidation. If we're going to buy the dip, we're going to see some more buyers come in consistently over the next few days, and that's going to make us believe the sentiment is ready for bulls to step in here. But right now we don't have that, so that's something to keep in mind of and completely ignore right now, as a bull, for a bull sentiment right now. Okay, so we look at here IWM. So this is the wick that we had on the hammer candle, and this is the breakdown that we have right about here, about 187 again. So I'm looking for IWM to break 184. If it does, my target is 170. So if we close below this on the daily on IWM, we're gonna make our way down aggressively to the downside very fast. As you guys can see, this is a bear flag, and it's ready to it's breaking the lower end. It's breaking support levels. If it breaks 184, we're making our way down to 170 really quickly. Okay, so that's something to keep in mind about overall market. Look at gold. I've been mentioning to you this guy, 175 is the level, 175. As long as 175 holds on gold, it'll continue to run higher. Right now, gold is not ready to break down. Gold is a hedge, and if the stock market continues to fall like this, gold will be a favorable asset for a lot of the names. Okay, that's something you guys want to keep an eye on. If this breaks to the upside around 186, we have a good shot at getting to 193. That's something you guys can keep an eye on. It's gold. Okay, VIX. VXX, like I've been telling you guys, this is something you guys want to keep your eye on. You don't want to keep your eye off the ball. VIX is holding this level and now starting to curl upwards. If we get above this 200-day line, we're making our way towards 35, then about 41. If we get to this level, we will see a further down move in all these stocks, and this will lead us down harder, right? So this is all leading us towards a downside. But it's important to wait for confirmation. Right now, VIX is still in consolidation. If we get a complete move above 30, it'll be a very, very not so good of a day in trading. In sense, we will have increased volatility, big moves, aggressive moves. You may not get the opportunity to enter, so keep your eye on something like that. Could be setting up in the future, but I do want to see a short-term rally. If we don't, and we just see continued selling to the downside, that is not something you want to see. That could cause a landslide, right? That's not something you want to see at all in any kind of market, but it'll present a good opportunity to make money either way you look at it. Okay, so let's look at Bitcoin. Bitcoin overall breaking down here. Okay, so we need below 37,075 here to break down here, or we need a break below 34,000. So if it breaks this, I'm looking for a break of 34,000, then we can run down to about 28 quickly. So right now the dominant trend is a downtrend, but overall in a really big consolidation here, Bitcoin between almost like a $30,000 to $40,000 move here that you can see here. So this is a big consolidation before it's ready to move to the upside or downside. So it's non-directional right now, so something to keep your eyes on. Bitcoin could potentially have a move. So if we look at the sectors here today, sector that's really hurting today, consumer discretionaries are hurting today. Okay, very volatile. Semiconductors are hurting today. Yesterday, to try to make a move to the upside, I always say one thing: wait for confirmation. Semiconductors not looking so good anymore. Okay, tech not looking so good either. So tech breaks 140, we're going down, and we're going to test about 130 and a complete breakdown here. Okay, so overall the market is very choppy. Protect your profits, right? But also wait for levels to break. If you want to understand technical analysis, you can reach out to us in our trading community. This is what we do. This is how we trade. We trade based on levels. If levels are broken, we'll be trading. If levels are not broken, we won't be trading. It's as simple as that. We don't make things more complicated than that. So look for levels. If levels are ready to break to the upside or downside, only then enter and exit. Otherwise, do not risk your money. I'll see you guys next week. Hope you guys have a good long weekend.